Good afternoon, folks. This is Kelly Buckley. This morning when I woke up, I checked all of our portfolio company news, like I always do, and I noted that Boeing was likely to have a down day today. This is due to breaking off contract talks with their union in Seattle. The union is on strike after turning down a 30% pay raise with health care benefit incentives and greater retirement contributions from Boeing. Boeing's currently trading down 2.3% for the day. You know, we always want to be proactive when bad stuff happens. And here's the reason that we are continuing to be strategically patient with this company. First, Boeing's a great firm. And they've got a moat, what's called a moat, that can't be breached by anyone else. A moat is barriers to entry to a business. This is why no one has canceled aircraft orders with Boeing, because they must go to the back of the line with Airbus, and it would delay their deliveries by many years. Boeing is also our country's greatest exporter in terms of dollar value. Our nation needs Boeing up and running, which is why the FAA has given some very encouraging signs on the progress Boeing's made after bringing in a new CEO with a background in both engineering and science. He's working very hard to provide their unionized employees with excellent pay and benefits. But he's also smart enough to understand the engineering side, which is what's been lacking in Boeing's leadership for many years. Boeing's already significantly undervalued, and once this strike settles, they should have very strong upside movement. I do not think that strike settlement is going to take a long time. I think it'll be very near. Next year, we anticipate a price point between $220 to $240 per share from the current $150 level. I want you to know why we've been strategically patient during Boeing's unbelievable string of issues. It's because we could be. You know, our firm's average client portfolio as of Friday is up 33.5% over the last 365 days. This compares to the Dow Jones 28.2%. And yes, our numbers after fees. This gives us some latitude to allow this major holding to reach what we believe is inevitably higher price levels. My opinion is that the fourth quarter of this year, economically and in the markets, will mirror the kind of movement we saw in our portfolio in the fourth quarter of last year, when we accurately projected a 15 to 20% return. Last year, our clients enjoyed returns similar to that were well above the market net of cost. We expect this last quarter to be a big one because there are big changes coming in how our nation's economy is being run. And we already know the economic effects those changes will have. We've seen them before. Boeing is on a much better footing with the FAA now than it was when all these problems started in 2018. We expect production to ramp up in the fourth quarter and for Boeing to be able to realize significantly higher income levels. Now, one last thing. If Boeing does have a new stock issue, and it is being discussed, of another $10 billion to preserve their investment-grade credit rating, this would amount to a dilution of a little over 10%. And that does not affect the long-term outlook we have for this company. So that's not a factor that's going to cause any Boeing share sales to occur in our view. Boeing still has billions of dollars sitting in cash and a standby credit line of $10 billion. So in closing, we are holders and buyers currently of Boeing, and we expect Boeing to continue to do very well throughout the fourth quarter and into next year. Please give our office a call if you have any questions, and God bless you.